Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Technical Analysis. Today is Tuesday, July 15th, 2014, and I want to start out a little different tonight because you're looking at a chart of Mastercard, and I have marked up this chart a little bit because we just closed out a trade today. The members did, okay, and I want to show you the trade. I just want to explain what happened, okay? So back on, what was it, the 27th of June, issued the trade alert down here at 72.80 was the number. Okay, that's the number most members bought it at. That's the number I got it at. Okay, so 2 weeks go by, right? So it's 2 weeks in a day, and we sold today, and the target price was 79.25. Now the stock went to 79.22, missed the target price by 3 pennies. However, I sent out a trade alert saying, you know, here are your options. Take it off the table, raise your stop on the other half. And oh, by the way, when the stock went up a couple of dollars, we took half off the table. Those members that want to do it that way, which I recommend, take half off the table. We put a stop at break even. So guess what? Cannot lose on the trade. Okay, that's the way we roll here. So then we let the second half ride, and you can move the stops up either mentally or putting them in if you want along the way. And so what happens is the stock went up. Okay, I had taken half off the table around here. Okay, and then the stock runs up and took the rest off here, and the total trade, the trade from bottom to top was about a 9% trade, 2 weeks and a day. This isn't an accident, folks. This is how we roll here. We don't always pick the bottom, but nevertheless, the signals were there, and all the signals I need to issue a trade alert came about in this one, and it just played out great. And by the way, how many times do we talk about this bullish consolidation, right? We have an up move, then we go sideways to down consolidation, and then we go back up. So the market kind of goes in waves like this: up, up, or down, up, down. Okay, it happens like that over and over and over again, okay? So we got up, down, up. There you go. So we've closed out the trade. Some guys are still in the trade if they want to be. Obviously, that's up to anybody that took the trade. But I'm out of the trade, and it was a successful one. So now let's move on. Let's talk about the spider today, SPY. And basically, it was a nothing day. It was as advertised yesterday. What happened was you had Janet Yellen testifying. It's called the annual Humphry Hawkins testimony. She's basically testifying in front of the Senate Banking Committee, and she's pulling out the speech that Bernanke gave, that Alan Greenspan gave, that Paul Volcker gave. I mean, they just pull out the speeches and they say, the economy's improving, we're doing everything we can to make sure that we have full employment, we don't see any inflation, and blah, blah, blah. And it's the same speech every time, no matter who she's talking to. It's always the same routine. And so that's the bottom line. So what happens is, she starts talking about a couple of sectors in the market, and maybe it's overvalued, and they start talking about her. That may be her irrational exuberance moment. Well, you know what? The market goes down. The S&P went down 9 or 10 points at that point, and that was the problem. It was her irrational exuberance moment. The market goes back up in the afternoon, and nobody remembers the irrational exuberance moment. Then, by the way, for those of us that don't know, the irrational exuberance moment was Alan Greenspan's irrational exuberance, that he said the market was at irrational exuberance, and that was basically close to a top. So anyway, so we move on, and we know the reason the market was down and up this week. It's because it's options expiration week. It has nothing to do with Janet Yellen. Nobody really cares. Nobody knows what she's talking about. None of the senators have a clue what she's talking about. They just go on and ask their questions on their TV time, and they move on. Most of those men and women don't have a clue. All right, so the S&P finished down 3+ points today, but it did make a nice move down in the morning, and then we floated back up the rest of the day. And let's just take a look at what that looked like intraday. Okay, float down, made a low, okay, floated back up, and this is actually a bearish pattern here that's developing. So we'll see what happens tomorrow morning. Let's see what the hourly chart looks like, the 60-minute chart. And you can't. There's nothing going on there. You just have no idea. Market's going to whip around this week for the next day or so, I think. And we're coming into our turn date, so we're going to look for the market telling us what it's going to do when. And let me show you an indicator of what I'm speaking about, what I'm talking about. You got the IWM Small Cap Index Russell 2000. Guess what? That was down about 1% today, while the S&P was basically just below the flat line. So here we go again, where the IWM, and I say this night after night after night, it's the market leader, up and down. Right now, it's the market leader on the way down. Well, we'll see. It remains to be seen. But nevertheless, that's what it looks like. You know, if the S&P was flat and the Dow was basically flat, why was the small cap index down? And I'm not looking for an answer, but the point is that to me, that's a tell. I'm looking for signals like that. So, we're going to keep our eye on that, and we'll see what happens over the next day or so. We may have a big up move tomorrow, and let me show you what happened after the bell. INTC is Intel. Talking and typing is impossible for me. Okay, so Intel, after the close, reported earnings, of course, big buyback program, blew away earnings, revenue, partnerships all over the place. So everything's going on all cylinders for Intel, and stock shoots up, I think, $1.29 or 30 after hours. And what happens is tomorrow, if we get a spike up tomorrow, and you get a reversal day, that'll be a tell. And we'll see what happens. I'm not saying that's going to happen, but you never know. Sometimes, Intel's big up after hours. Maybe it goes up $1.50, $2 in the morning. And then if it reverses back down on any kind of heavy volume, that will be one of those indicators, one of those market signals talking to us. So we'll see what happens. Or it may just go up and continue up, which would be basically, you can call that one of those gap and goes. It's just going to gap up and go all day. We'll see what happens. You'll have a lot of positive talk about Intel in the morning. They'll ride the Intel wagon all the way to the open tomorrow. So expect the futures to be up, expect the NASDAQ to be up, and but that could just be a one-day wonder, even half-a-day wonder. Don't read anything into it. It's just one stock. It's not going to be able to impact the larger turn cycle upon us. Okay, gold. Let's talk about gold, because we had another down day, and again, I've been kind of banging the table a little bit. I've been saying we have a reverse head and shoulders pattern to the upside on the GDX. I said, but wait, because I don't think gold is finished making a low yet, and I don't want to be a buyer up in this neighborhood here. Okay, I didn't think that was the breakout that we're ultimately looking for. So I think that, I said last night, I want to pick it up in this neighborhood. 122.5 to 123 is my number. That's the number that I'm looking for. If that number happens in the next week or so, I'm going to issue a trade alert on gold, and then we're going to start looking for some of the gold miners and the GDX and all that stuff. So that's where we are there. That's about it for today. I'm going to give it a wrap. And, well, you know what? Let's talk about the oil market, because oil was down again. And you know what? This goes to show you. Here's the story. This is that bad trade again from last week. Okay, it went down another day. It went down today, but today it reversed. And I don't know if this is the best reversal pattern I've seen in a while, but you know what? We filled this gap here, and I was never looking at this gap. I didn't think we'd get down there, and I wasn't comfortable down below this level. Well, you know what? If you're a trader and you don't like to lose money, okay, and you bought it at 37.21, which was my ultimate bottom line number, okay, and now you were down here, well, that's not what you bought the trade for. So even though I still think there may be upside to USO, and for those traders that want to take some risk, I'm not issuing a trade alert to members on this, but this is just food for thought. You can buy it here if it's in a reversal pattern. You'll know it within a day or so. You can buy it here, and you can put your stop right below today's low. So today's low is 36.58 on the USO, right? You can put a stop on a daily close below 36.58. That was the number, right? 36.58, 36.58. You can put a stop below 36.58, and just ride it and see what happens. And if you're wrong, you're wrong. But if you're wrong and you're wrong by 20, 30 cents, that's a good risk reward, because this thing still could have $2 to $3 of upside in it if it begins to run on some geopolitical events, the Middle East, all that stuff. So we'll see. It's a good risk reward for a kind of a rapid fire trade, if you will. So I don't know. I think we're going to leave it there tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks. It's common sense market analysis.